Okay, so let's start. Now, today we're talking about market structure. Welcome to liquidity trading concepts. So today we're talking about market structure. So during the first part of the class, during the first part of the class where we talked about market structure, trend lines, and all that, yeah, with chart patterns included. We also talked about market structure. But here we are again talking about market structure. This is to show you that market structure is actually the bedrock of trading. Regardless of the strategy you trade, anything you trade, as long as it is a technical something, first thing you want to look at is the market structure. So, unlike the basic, where we talked about market structure being higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, like that, right? And we have the lows, lower high, lower low, lower high, lower low, lower high, lower low. So this is said to be an uptrend, and this is said to be a downtrend, right? But in reality, this is not how price moves. All right, this is not how price moves. Price moves in um a little bit more complicated way than this, because if price moves like this, all of us will be millionaires, because it will be easy for us to be able to identify what it will be easy for us to be able to identify what's it called, be able to identify where to buy next easily, and everybody will just be risking all their money. But this is not how market structure presents itself in reality. Of course, I already said this in the first class, but I'm just repeating everything again. So this time around, in liquidity trading concept, market structure is divided into three. We have the major structure, the minor structure, and the substructure. Now, the major structure, in this case, we have this uptrend. This is the major structure. We all know that this pair now is in an uptrend, looking at it like this, right? Then we have what we call the substructure. Excuse me. Sorry. So this is the major structure: higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? Then we now have what we call the substructure. Now the substructures are said to be internal structures. That is, this move from this higher high to this higher low is what we call the substructure. It's like the opposite structure inside the main structure. This is why when you go to, like, let's say when you go to something like the Euro USD, you might see that the overall structure is bearish. But then you now go to 4 hours. Let's say daily time frame is bearish. Then you go to 4 hours, you see that 4 hours is bullish. Then if you go to let's say 4 hours was bullish to a point, then later you now start seeing my nose is low. Excuse me. Okay, sorry, my mouse kind of like went slow. I needed to get the charger. So let's continue. Now you can actually see that Euro USD on the daily is bearish, and on the 4 hours you are seeing it being bullish, right? This right here is the substructure. It is not the main structure. This is why most cases you see some traders they be like EU exchange character here. So suddenly it is bullish. So you see them trading above, targeting above this point, which is not supposed to be so, right? Why? This is just an internal structure. This is just what an internal structure. That is what we are looking at here. The substructure in this case is this pullback. The substructure in this case is this pullback because in reality, this is practically how you are going to see price move. You are going to see price move like this, breaks that high. How do we confirm our swing high? Small change of character, right? Now we are going down into where we are going down to the lows. Hang on, did I teach you guys premium and discount during the other class? Yes, I taught you guys premium and discount. I remember because it's supposed to be in that class, not this one. So what are we doing? We're expecting price to come down into discount levels here before we see what? Before we see another buy. Change of character, break of structure to a new high. Change of character again. Then we are coming down for a new low. Before another change of character. And we are doing what? Going to a new high. Don't worry, I'm coming. I will expand this. So now looking at this, what do we have here? We have break of structure, another break of structure here, break of structure. Now this is how price moves in reality, right? And in this case, we have higher low, higher high, higher lows, higher high, higher low, higher high. We all know why this particular high is um we all know why this particular high is called an higher low because it is a low, but it is higher than this previous low, right? Same with this one, and a low that but it is higher than this previous low, which is why it is called um higher lows, and this is the higher highs, right? Now, sorry, I just go back to a lot of noise in the background for now. So this right here, looking at this right here, is the major structure. And let's say if this pair is actually this is gold. Okay, let's say gold is bullish. Looking at this now, this is the major structure, right? Now this is the minor structure. So this is the substructure. This particular opposite trend. This is what we now call substructure. This opposite trend before the next move is what we call substructure. It is usually opposite to the major trend. Now these are the minor structures. All these minor trends within the main trend is what we now call the minor structure. All these minor trends within that main trend is what we call the minor structure. So you open your charts. Let's say you are a swing trader. The first thing you are looking at, you go to the daily time frame and you are seeing this. This is the major structure, right? Now let's say you now go down to the 4 hours to take your trade. Then you see price around this level here. Okay, let me use this. Let me use this current one. Then you see price here. You've seen how price moves, right? Then you see price here. This entire thing is the major structure. This is the higher low. We've not confirmed our higher high yet. Why? There is no change of character. Now, the moment we see a change of character, we confirm our higher high. Now, in this case, we have our swing low and we have our swing high. How do we confirm our swing high? How do you confirm our swing low? Sorry, we confirm our swing low when it breaks the previous high. Then we confirm swing high when it changes character by taking out the previous minor structural low. Here, there's going to be minor structures, right? Now, when price takes out this minor structural low, there's a change of character. This is the mistake that makes a lot of people get bonds. When you see this minor structural low, a lot of people now will be like, gold is bearish. Not knowing this change of character is just to facilitate a pullback into discount levels before the next buy. Once you've seen this change of character, next thing you are getting your gun box too, and you are drawing from this higher low to this higher high. What are you expecting here? You need price to come back into discount levels. In some cases where price does not do that, you ignore. There's going to be opportunities. This is why you don't get to trade every day. So when price pulls back into discount levels, then you now see a change of character for a new buy. This is just the basic of the basic institutional structures right here. So in this case, for price to actually give us a new high, it needs to do what? Invalidate these substructures. Now, when you are trading on substructures like this, you are trading on these substructures, take note of this. The moment you see a change of character, sometimes price might appear something like this. The moment you see a change of character, something like this, you are not looking to sell from here. Once you see this change of character, this is a signal telling you that price wants to respect these discount levels and buy from there. So in this case, we have major structure. This is the minor structure. This small uptrend. This break of structures here you are seeing. This small break of structure here you are seeing are minor structures. So in a situation where before price gives us a new high, right? Let's say before price gives us a new high, we saw something like this. Price stopped here, and we saw this change of character around here. This is our structural low. This is our structural high. We've not confirmed this place to be a protected level. For this place to be, for this place to be a strong level, we need price to break structure. But in a situation where price has not broken structure yet, and we see a change of character on this minor trend, this low becomes at risk. Because what we price likely do, you will likely see price after this change of character, you likely see price move up and start selling. And when it starts selling, this low does not have any base to be a protected level because it did not take out the previous high. Then you likely see price take it out. So a proper understanding of minor and substructures is going to help you understand where to actually avoid and where to actually buy from. Now, when you see a substructure like this, you see price moving bearishly on the 4 hours time frame. And on the daily time frame, it was an uptrend. That is why on the daily time frame, what you want to do is you want to mark out your key levels before you go down to the 4 hours time frame to analyze if you're a swing trader. If you're a day trader, on the 1 hour time frame, you want to mark out your key levels before you go down to the 30-15 minutes to analyze. It's as simple as it is. I gave you guys this 3 time frame analysis. So let's say we mark our daily time frame. This is our key level. This is the area where price rejected from. This is also another area where price reversed from, right? Then I am actively selling. I'm actively selling. Then price got here. Then price got here. Imagine I do not mark out this key level. I will not know that price wants to reverse from here. And what's going to be my next line of action? I'll be looking to, since price respected this low, give us a new low, respected this one, give us a new low. And as you can see, So I'll be expecting price to also do what? Respect this one to give us a new low. To give us a new low like this. Forgetting the fact that the higher time frame is actually bullish and we are approaching a key level on that higher time frame. Then what we price likely do, let's say we are not selling from here. Let's say we are not selling from this point here. Because of course now it is a protected, this is the next line of action. This is the next line of action to actually do. It's a protected low, right? It gave us this new low here. Let's just put it that way. So we need price to tap into this level and continue selling. But since we have approached a strong area of reversal, which is a key level, a discount level as at that matter, and a protected low, because the major trend is what? Is bullish. We will not likely see price do something like this. Breakouts. Invalidating all this area, take your stop loss out, reverse, possibly, and start buying. Simple. So you need to take note of major structure, minor structures, and substructures. So when you open your chart, you've seen the major structure being bullish. You mark out your what? Your swing low, your swing high. You have no business with these points. You have no business with these points. This is where you are working with. Just this place. When price gives us a new high, then automatically you are done with this. This is where you are working with. And what are you doing here? Every single thing happening between this low and this high is what we call the internal structure, right? You see the minor, you see the substructures. Everything happening within this is what we call the internal structure. Those that want to trade reversals, they will cash reversals down to this point to now start buying. Those that want to wait for price to come down to discount level so that they can catch the continuation buy, they do that as well. But everything happening inside there, understand it to be what? Internal structures. You might see price do something like this, still come back again to take out this particular low, and still go back down to come back to this particular low here. Everything happening here is just noise. They say the lower time frame deliver price to the higher time frame. So you take note of how price build up on the lower time frame, because when you go down to the lower time frame, let's say this is the 4 hour substructure. If you go down to the 1 hour time frame, you're still going to see another substructure. Then if you go down to the 15 minutes time frame, here it is. This is a substructure, right? 4 hours time frame. Now watch what you will likely get on the 15 minutes time frame. On the 15 minutes time frame, you will not likely see this. You see this pullback from this point to this point, so that gave us this higher and this lower high before this lower low. It's like this. You'll likely see something like this. On the 15 minutes time frame, you are seeing a clear uptrend. This is what the day traders trade. They see a change of character, they now start seeing downtrend. To give us what? To give us a new low. And this new low is this one. After this one, there's another pullback before this one, right? Then you start seeing another what? You start seeing another substructure to the upside. And after that one, you start seeing another one to the downside. Sorry. Let me shift this. You start seeing what? You start seeing the minor structure to what? To the downside. To give us another break of structure. After we've gotten this break of structure, which is this one, right? You saw this pullback before this next break. You still see another minor trend. Something like this. To what? To premium levels. Why is this to premium level? 4 hours is bearish. So trading lower time frame, you are trading these particular points. Which is why if you want to trade, you just need to pick 3 time frames. Because if you decide to join the entire time frame together, at some point you become too confused. Daily is bullish, 4 hours is bearish, 15 minutes is bullish and bearish. Your head will scatter. That is why you need to focus on 3 good time frames. If I'm using the 1 hour time frame now, I'm focusing on the fact that this 4 hours is built. This thing right here is bearish, right? Then I want to focus on these pullbacks for price to now give us a new low. So once I've seen this pullback and I see a change of character, I'm getting on this trade to get what? To get a new low. But before that, I've already marked out key levels. Key levels. And what are these key levels for? To know the area where you are likely going to stop selling and start buying, or where you're likely going to start buying and stop selling. Because you can't be trading blindly without structure. It is very, very important. So you open your chart, you see the major trend, and you are seeing this entire thing right here. This is the major structure. It is bullish, right? But you cannot be waiting for price to take 3 to 4 weeks to come down into these levels before you start buying. You can catch these moves around here from these substructures. You can do that. Then when you go to the lower time frame, you not like the 4 hours time frame, you now see that this is the substructure and it is building a bearish momentum. Yeah, you can still go down to the 15 minutes time frame. This is a low. It is currently at a premium high. We are still expecting price to come down lower. Why? This 4 hours level is still protected. If price wants to buy, it is going to show you intention. It will not just boom and start buying. There's going to be there will be signs. If price taps into this level now, I want to respect this level. There will be signs. You will see that change of character. Let's go to the live charts. Let's go to the live charts. Now, let me use the 1 hour time frame. Let's say we are day traders here now. I'm going to use this current swing. Then we check more examples on gold. So let's look at this. So we have this low that gave us this high. So this is like a protected level, as you can see. So I'm just using this current one. Right? So will not be like it is not really working. So this is the low that gave us this high. So this is what I want to work with. This is my protected low. And this is the new high. Right? Let's say we met price when price was here. This is all I'm looking for on this 1 hour time frame. I've gotten my 1 hour swing structure. This is it. So all these things has not happened. For instance, all these things has not happened. We are just focusing on this. So we've gotten our 1 hour this thing. So then we go down to like the 15 minutes time frame. Going down to the 15 minutes time frame, what can you see? This is just a minor structure, right? Now this is the substructure. You can see this bearish move. You can see the bearish break of structure, break of structure. Now, if you did not mark this level, if you did not mark this level, it's not even about if you did not mark this level. If you go to Twitter as at yesterday, was it? Today is yes, as at on Monday. Yeah. Go to Twitter as at yesterday. Many people were trying to sell from here. Some even sent it to my DM. I was like, I watched your YouTube. This is your engineered liquidity, blah blah blah. Yes, it is, but you are trading against the entire structure. Now watch. This is a break of structure. So this is a change of character, and this is a break of structure. Price pulled back, respected this high, gave us a new low. This is another break of structure. Now, if you did not check the main structure, you will not know that this thing was bullish. Looking at this, it is bearish. And any person that is buying from here, I won't blame them much because they are just following the trend. Right? But what do we have here? Use the gam box. From this low, see this thing we marked on the 1 hour time frame. Price is already at discount levels. So we shouldn't be looking at buys anymore, at sales anymore. Sorry. We want to be focusing on buys. And for us to focus on buys, we need to see that change of character. I told you, if price wants to buy from here, there will be signs. Since you've marked this 1 hour time frame, we are able to do what? Mark our swing structures, the key levels. Then 15 minutes time frame, we've analyzed everything, right? This is where we are looking at this point, right? Good. So for us not to be ahead or too faster than our shadow, this is where we are working with though. But we don't want to be too faster than our shadow. We now go down to the 5 minutes to see if we can pick a very nice entry. That is the third time frame we'll be using as a day trader. Now going down to the 5 minutes time frame, what did you say? I told you there will be signs. So what sign are you seeing here? You see this low, price went up. This is it, right? You can see price went up to this point to give us an high. And this high is supposed to give us a new low and it failed. Remember, what did I tell you? Any level that fails to give us that fails to break structure becomes a weak level. And what did we see price do here? Take it out. Right? This This right here, this is the break of structure. This is the change of character. Sorry, he took it out. And I told you after price changes character, we need that break of structure to confirm it, right? So in this case, this is what we call confirmation, although we've not gotten there yet, but I'm just going to just mention it, right? When there's a change of character, we need a break of structure to confirm that price wants to buy. But it does not apply when it's a confirmation. It only applies when it's an overall trend change. When it's an overall trend change. So in this case, I told you there will be signs. This is where I want to buy from. Why are we trying to buy from here? Because there was this break of structure here already. The structure is bullish already. We don't need that much. The only sign we are looking for is that sign that is going to tell us that price wants to respect this low when price gets here. Then price got to this point and we see that change of character. I told you this is a substructure. It is not the main structure. The main structure, we've already gotten it from the 1 hour time frame that is bullish, right? So this is internal structure. Everything here is noise. And I told you when price gets to this level, for us to know that it wants to buy, there will be signs. And that sign is a change of character. What is this character change? This change now is to tell us that price wants to change from this substructure, this bearish structure to a bullish one. So we got this change of character and we got what? See price pull back down, give us a break of structure, and price continues and price started doing what? Price started going up. Price now went up. All this now you are seeing here are minor structures. Minor structures. These are not minor structure. All right. Here's another one. This one here that price even pulled back to this level, then later went back up. It's still under minor structure. Now, those uninformed people at this point now they can even say this thing like the change of character. And you still see themselves from here again. Most of them will still from here again, giving us more liquidity, more liquidity. Because before you even start trading anything, make sure your market structure is on points. Right? That was why I said everything that is happening inside this low and this high is noise. Sorry. Focusing on market structure, you are supposed to even know that this low is what gave us this high. So for price to pull back down like this, then went back up, failed to give us a new high, break this particular one, it is not the break of structure you are looking for. Price is already bullish. At this point, price is already bullish. Then what else did we see next? We see price finally break structure. This is now the main break of structure we are looking at. So if I was to buy from here, this is going to be my target, a new high. If I was to buy from here, this is my target to give us a new high. This right here, substructure. This right here, minor structures. But this is the main structure from this low to this high. So as price came back down, if I want to mark this level now, this is how I'm going to mark it. Sorry. If I want to mark it, this is it. Higher low, higher high, higher low, and we're having a new high. So everything inside here now is noise. Unless I want to scalp, then I can go down inside this place and start looking for what substructures inside these 5 minutes and take entry on 3 minutes. But looking at this now, you see how I was able to break it down from the 1 hour time frame down to the 5 minutes time frame. 1 hour time frame, I mark out the key levels. Then premium and discount, measure it. In 15 minutes time frame, I was able to identify the substructures and areas where price will likely react from. So I decided to take this particular, you will know why I take this particular area later in the future. This is just market structure. We've not even started. You guys are actually in luck. We are just even starting. So substructure, then major structure. So this is how it moves. Let's take one again, one more example on good, and we'll call it a night. All right. Let's see. I just did lower time frame. Now let me do higher time frame. Let me do higher time frame on good. Only God knows where this thing is pointing to. Only God knows where gold is pumping to, because what's in the world is this? Okay. Let me use this. Which one should I use here? This is 2018. No, that's too far. Okay, let me use this one. Let me use this particular one. This break of structure here. We have one break of structure. Okay, let me use this one. Let me use this one. So here on the daily time frame, you can see price give us this low and give us this high, right? Let's say all these things now has not happened. This is 2023. The funny thing about this structure is this is the first good trade I took. This is the first ever good trade I took, 2023. So looking at this structure, we've marked the low, we've marked the high, right? This is our key level. This is what we want to work with. And why are we working with this? This recent break. So this is the daily time frame, right? Then we can now go down to like the 4 hours to now analyze. After analyzing, then we'll go down to the 1 hour time frame to pick an entry. This is me. I'm trying to swing good now. Where is it? Okay. Now looking at it, what do we have here? For me to confirm this I need that change of character, right? I already have the change of character here. This change of character price taking out this minor structure. Some people now during this period, when price took out this thing, they'll be like, gold has flipped bearish. It took out this low that gave us this high. It has flipped bearish. They forgot to mark out this area. That's flipped bearish. Now, what are we seeing here? We are seeing the substructure. All this is happening here. Sorry. All this is happening here are all substructures. Even this one, that price came down to this point. Look here. This one, that price came down to this point, then went back up to respect this high, give us a new low. Look at it. Very nice substructure. This is another one. Nice break of structure, right? We are seeing another one here. But we've already marked these levels. This level as our lows. This is our low here, right? This is the low. And this is the high, right? So mostly you will likely see people try to sell from here. And if you are selling from here, where are they targeting? Below this low. So for price to go down below this low, it has to take out this particular low, right? But price has approached a strong level. This is our swing low. These are our protected low. These are our protected low. The low that gave us this high. Price has already price has approached it. You don't want to be looking at sell anymore here. You want to start looking for signs. That is not signs and wonders. You want to start looking for signs to tell you that what price wants to respect this level. Now, everything you are seeing here is now noise. When we go further, I'm going to call this everything here is no longer noise. It is internal range liquidity. We'll get there, don't worry. But for now, let me be using the word noise. Everything you are seeing here is now noise. So we need signs. We've analyzed the chart now. We've seen how it is. We've seen where we are buying from. Price is currently at discount. Then we can go to the 1 hour time frame. I'm not sure if this my chart will get to the 1 hour time frame. I'm not donating money to trading view premium or whatever. So let's see if my chart will get there. If it doesn't get there, I'll use another example. Some of you think that what is it called? Let's see. Oh, I should have just used this example. But not to one. But don't bother. Let me go back to that one. Hopefully my chart reached there. Is this network? I hope you guys can hear me, Sha. I don't know why it is taking time to load. Okay, good. Somebody asked why I don't use TradingView Premium. What am I using it for? I should just be dashing TradingView money. To backtest effectively safe. I don't need that replay tool. That replay tool is even going to confuse me more. This is May 2024. And the fact that I've been trading gold for long, I still don't need years of price data because I've been trading it for years. And it has been following it. Okay. This is January. Okay, it did not get there. So I've seen another example to even use safe. Don't worry. I've seen this example to use. Let me just use this one. Funny thing is, all these examples I'm using are mostly trades I took. Yeah. I don't know anybody that's been following me will remember this particular trade. Very funny trade. Right? So looking at this particular one, let's say we've marked this low and high, it's still the same low and high on the daily time frame already. So we go to the 4 hours before we come down to this 1 hour for entry. Let's stay on the 4 hours first for now. This should be the last example. Why is this network slow? What's going on? It's not supposed to be slow. Huh? I've already contacted ancestors. So this network is not supposed to be slow. Good. So remember, this is the daily high and the daily low and high. This is our swing structure. This is what we are working with from this level to this level. So on the 4 hour time frame, we marked our premium and discount to be here. Good, we've seen it. Now let me remove it. We've seen it. This is a change of character. Price breaking minor trend. Don't forget, this thing you are seeing here is minor structure. These small ones, minor structure. And this substructure. This opposite one, substructures. So you need to know that substructures are pullbacks. Even in a downtrend, substructures are pullbacks that facilitate price to go down towards discount or premium level before the next leg up or down. Before we get a new high or new low, substructures are the pullbacks. So you don't want to be caught trading pullbacks as a major structure. That is where you get bonds. This is the most funny trade of 2024. I messed up a lot of guys. I did not mess up a lot of guys. Sorry, that was kind of like pride. But yeah, I proved to a lot of guys that you can actually use the basics to actually make a lot. This trade was posted on Twitter, this particular trade, this long. And when I posted it, this particular long here, this was in May. And the trade triggered in June. This was the long. I posted it. Some guys were now like, this is where price is going to sell from. They are trying to sell from this substructure. Now, price selling from here is not the problem. The problem is for price to sell from there, the only logical target is to have a new low. For price to sell from there is to have a new low. And this is where the new low is likely going to be. Here, below this low. Now, for price to go below this low, it has to go below this protected low. So I don't see that happening. Right? I do not see that happening because it doesn't really make logical sense. That we already have this swing structure. Price has come down into discount and price perfectly respected this low and it is going up. Then you want to sell from these points to give us what? A new low. It has a lower chance of happening than this high happening. So going up has higher probability. Then I was like, thank you guys for the liquidity because we need liquidity around this point, this point. It is called internal range liquidity for a reason. because there are some people that want to sell from there and their stop loss will be above these levels. And liquidity is that money. So we need those liquidities to actually go up. And I was like, thank you guys for liquidity. And they thought this was funny. And price bought to give us a new high. But that's not where I'm getting to. When these substructure got to this point, I told you, if price want to buy, there will be signs. This is just the 5 hours time frame. Then we'll go down to the 1 hour time frame to look for our sign for that buy. If price wants to buy, there will be signs. This network is killing me. Come on. There's no time. I need to go and have dinner, man. With this slow thing, now I hope you guys can hear me. Just type yes if you can hear me. I don't understand why. I guess it is trading view network. Okay, it's trading view network. It's not my network then. Now, like I said, there will be signs. Price has gotten to this point, right? Look at this previous side, break of structure. See the minor structure, see the substructure here, and it has gotten to this point. We can either decide to just buy aggressively or no. We wait for our signs. And where is the sign? This is the sign. Price went up, right? Give us this low. This low now, from this high, this low is supposed to do what? Come down to take out this one, but it did not happen. Instead, price went back up to break it. That is the change of character, and that is the sign we are looking for. Then we cannot decide to buy. Then price after breaking it, it came back down and bought straight to give us what? A new high. After it came back, it started giving us this minor structure. As you can see, minor structure, break of structure within, pull back, another break of structure. But where is this particular break of structures going heading to? It is heading towards, it is heading to a new high. So take note of substructures, take note of minor structures, and take note of the major structure. So you don't get caught in the middle of it. This is as simple as it is. All those things you are hearing, institutional market structure, blah, 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 blah. This is just it. When we go further, you will be able to understand how price takes liquidity from one point to another before it moves. But this is it, step by step. I'll be seeing you guys in the next class. The next class is when I'll give an assignment. But for now, go and study this. In fact, no, don't go and study it. Take assignment, please. Assignments. Mark out the major, comma, minor, and sub. Reduce your minor and what? Substructure on any pair of your choice. On any pair of your choice. Mark out the major, the minor, and the substructure on any pair of your choice. Now, in this case, you don't want to be marking out the major structure on the daily and you are giving me minor structures on the 5 minutes time frame. One particular screenshot should be able to do it. Looking at this chart now, you can be able to identify the major structure, the minor structure, the major structure, regardless of everything you're seeing here. Just one particular structure on any pair of your choice. Simple. Now, what you have to do is you use this tool. Where is that tool? This call out tool, this one here, and label it. You use this callout to do what? To label it. This minor structure, this one substructure, and this what? The major structure. All right. That is just what I want to see, as simple as it is. I'll be going through it. Let me know those that actually understood this and those that don't. Prepare your questions for Friday. We are moving forward. Thank you, guys. I'll be seeing you guys in the next class. Someone should please. I'm not on my phone. Okay, let me do it myself. Let me do it myself. Because looking at the numbers here, some people are not here. Okay, see you guys in the next class. Thank you.